Get ready, crypto enthusiasts, because the market is absolutely exploding with news, and we've got the absolute hottest takes, the most critical updates, and the biggest potential movers right here, right now. The pace is relentless, the action is nonstop. And if you're not plugged into the pulse of digital finance, you're missing out on a revolution. We're diving deep into institutional shifts, critical market levels, and game-changing technological integrations that could redefine the entire landscape. This isn't just news, it's your essential intel for navigating the future. Buckle up, because the Bitcoin Bulletin is kicking into high gear, and you won't want to miss a single second of this electrifying breakdown. First up, we're seeing a massive surge in institutional confidence, with major moves in Bitcoin mining and on-chain Ethereum accumulation that could signal a new era. What does this mean for your portfolio? We break it all down. Then, we're zeroing in on the critical price levels and market sentiment for XRP, Bitcoin, and Ethereum. Are we looking at a strategic entry, a potential exit, or a whole new pathway for traders? The charts don't lie, and we're here to tell you what they're saying. Next, it's a showdown in the public markets. Bitcoin Depot versus Coinbase. Which of these crypto giants is poised to ride the next massive wave? We're comparing their strategies, their performance, and their potential for explosive growth. You need to know who's leading the pack. And finally, hold onto your hats, because Tether is making a monumental leap, launching USDT natively on Bitcoin via the RGB protocol. This is a game-changer for stablecoins and for Bitcoin's utility as a payments network. We've got all the details on how this integration works and what it means for the future of digital transactions. Don't go anywhere. Hit that like button, subscribe to the Bitcoin Bulletin, and ring that notification bell so you never miss an update. Let's get into it. Institutional confidence surge. In a significant development that could reshape the digital asset landscape, a new era of institutional confidence appears to be dawning, marked by substantial activity in Bitcoin mining and on-chain Ethereum accumulation. This trend suggests a growing conviction among major financial players regarding the long-term viability and potential of cryptocurrencies, moving beyond speculative interest to strategic allocation. The implications for market stability, price discovery, and the broader adoption of digital assets are profound, potentially heralding a period of sustained growth and integration into traditional finance. The intricate dance of capital flows and on-chain data is painting a compelling picture. Reports indicate a notable uptick in institutional investors acquiring and holding Bitcoin, often moving it to cold storage or wallets not typically associated with short-term trading. This accumulation pattern is often interpreted as a sign of belief in Bitcoin as a store of value, akin to digital gold, and a hedge against inflation or economic uncertainty. The sheer volume of these transactions, when aggregated, points towards a coordinated or at least a widely shared sentiment among sophisticated market participants. Furthermore, the on-chain data for Ethereum is showing a similar trend, with a significant increase in accumulation by entities that exhibit characteristics of institutional behavior, larger transaction sizes, holding periods extending beyond typical trading windows, and activity patterns consistent with regulated entities. This heightened institutional interest is not occurring in a vacuum. It's happening against a backdrop of evolving regulatory frameworks and increasing clarity from governments worldwide regarding digital assets. As regulatory sandboxes become more defined and compliance pathways clearer, institutions feel more empowered to engage with cryptocurrencies. This has led to the development of more robust infrastructure, including regulated custodians, derivatives markets, and investment vehicles, all of which lower the barrier to entry for institutional capital. The growth in Bitcoin mining capacity and efficiency, often driven by significant capital investments, also plays a role. It signals not only a belief in the future profitability of mining, but also an understanding of Bitcoin's foundational importance to the digital asset ecosystem. Efficient mining operations are crucial for network security and decentralization, factors that institutions increasingly scrutinize. The confluence of these factors, strategic accumulation, improved infrastructure, regulatory clarity, and robust mining operations, creates a powerful narrative of institutional acceptance. It suggests that cryptocurrencies are transitioning from a fringe asset class to a recognized component of diversified investment portfolios. Analysts are closely watching these on-chain metrics and institutional flows, as they are often leading indicators of broader market trends and potential price movements. The question on everyone's mind is whether this burgeoning institutional confidence will translate into sustained price appreciation and widespread adoption, marking a pivotal moment in the evolution of digital finance. But is this institutional embrace a sign of a new bull run or just a temporary realignment? We'll keep a close eye on it. Next, we're dissecting the critical price levels and market sentiment for XRP, Bitcoin, and Ethereum. Market crossroads approaching. In a crucial moment for major digital assets, traders and analysts are closely monitoring critical price levels and shifting market sentiment across XRP, Bitcoin, and Ethereum. The current market dynamics present a pivotal juncture, potentially dictating strategic entry or exit points for investors navigating the volatile landscape of cryptocurrencies. Understanding these key levels and the underlying sentiment is paramount for anyone looking to capitalize on upcoming market movements or mitigate potential risks. The technical indicators for Bitcoin are flashing signals that demand attention. Key support levels are being tested, and a break below these could signal a further downturn, while holding these levels might pave the way for a renewed upward trajectory. The market sentiment, often gauged through social media activity, news cycles, and derivatives market data, shows a mixed bag. While some remain bullish on Bitcoin's long-term prospects, citing its growing adoption and institutional interest, others are expressing caution due to macroeconomic headwinds and regulatory uncertainties. The efficiency of Bitcoin's network, particularly its transaction throughput and fees, also influences sentiment and adoption rates, impacting its appeal as a medium of exchange versus a store of value. Ethereum, the backbone of the decentralized finance, DeFi, and NFT ecosystems, is also at a critical juncture. Its price action is closely tied to the health of its network, the success of its ongoing upgrades, such as the transition to proof-of-stake and future scaling solutions, and the broader adoption of applications built upon it. Sentiment around Ethereum often reflects the innovation pace within its ecosystem and the competitive landscape from other smart contract platforms. Recent accumulation patterns on-chain, particularly by larger holders, suggest a growing belief in Ethereum's utility and future value, despite short-term price volatility. The upcoming network upgrades and the potential for increased staking yields are key factors influencing investor decisions. XRP, with its unique focus on cross-border payments and its ongoing legal battles, presents a distinct set of challenges and opportunities. Its price movements are heavily influenced by regulatory news, particularly developments related to its classification by financial authorities. Market sentiment for XRP can swing dramatically based on legal rulings and statements from key figures within Ripple, its development company. Traders are watching XRP's correlation with broader market trends, as well as its independent catalysts, to identify strategic entry and exit points. The ongoing narrative around XRP's potential role in a future global financial system continues to drive speculative interest, but the inherent uncertainties mean that risk management is exceptionally important. Collectively, the price action and sentiment surrounding these three major cryptocurrencies offer a microcosm of the broader digital asset market. Whether these levels represent a strategic gateway for new capital or a warning sign for existing positions will become clearer in the coming weeks. Investors are advised to conduct thorough due diligence, consider their risk tolerance, and stay informed about the evolving market narratives. These price levels are certainly creating a buzz, but what happens when these digital assets meet the traditional stock market? We'll explore that next. Get ready for a direct comparison between Bitcoin Depot and Coinbase. Crypto stocks clash, Depot versus Coinbase. In the dynamic world of digital assets, the performance of publicly traded companies is increasingly scrutinized as a barometer for the broader market's health and direction. Two prominent players, Bitcoin Depot Inc., BTM, and Coinbase Global Inc., Coin, represent distinct yet interconnected facets of the cryptocurrency ecosystem. Bitcoin Depot, primarily leveraging its extensive network of Bitcoin ATMs and the innovative BD checkout service, focuses on the accessibility of physical cash-to-crypto transactions. In contrast, Coinbase offers a diversified suite of services encompassing trading, staking, institutional services, and a strong push into stablecoins, notably its partnership in the development of USDC. The critical question for investors is, which of these strategies is better positioned to capitalize on the next wave of crypto momentum? Bitcoin Depot's business model is heavily anchored in its physical presence, with a vast network of BTM kiosks. As of mid-2025, these kiosks accounted for nearly all of its revenue, facilitating transactions with a median size of $300. The company's strategic expansion includes BD Checkout, a model that integrates crypto purchases directly into retail environments, thereby reducing the need for new hardware installations and associated rental costs. This approach aims to broaden its customer base and boost transaction volumes by meeting consumers where they already shop. Bitcoin Depot's recent acquisition of Pelicoin, LLC, and its expansion into franchise profit-sharing arrangements and strategic deals with major convenience store chains like CEFCO and EG America LLC underscore its aggressive growth strategy. Furthermore, the company's decision to purchase and hold over 100 bitcoins in its treasury signals a firm belief in Bitcoin's long-term value proposition as both a strategic asset and a store of value. Coinbase, on the other hand, operates on a more diversified and digital-centric model. Its revenue streams are broad, covering retail and institutional trading, prime brokerage services, custody solutions, and subscription-based offerings like Coinbase One. A significant portion of its subscription and services revenue comes from stablecoins, highlighting the company's strategic bet on their stability and utility. The recent signing of the Genius Act into law, which clarifies the regulatory landscape for stablecoins by preventing their classification as securities and establishing federal oversight, provides a favorable tailwind for Coinbase's stablecoin initiatives. Bitcoin transactions still represent a substantial portion of its revenue, underscoring its core business. Coinbase's aggressive expansion strategy is further evidenced by its significant acquisitions, including Centilla BV for crypto derivatives, trading expansion, and previous strategic buys like One River Digital Asset Management. These moves indicate a commitment to broadening its global footprint and service offerings. From a performance perspective, Bitcoin Depot has significantly outperformed Coinbase year-to-date, with BTM shares soaring 137% compared to Coin's 24.4%. Valuation metrics also present a stark contrast. Bitcoin Depot trades at a forward PE of 8.82x, while Coinbase trades at a considerably higher 50.05x. This suggests that BTM is more attractively valued, although Coinbase demonstrates greater efficiency with a positive return on equity ROE of 16.02% compared to Bitcoin Depot's negative ROE of 44.12%. Earnings prospects also differ, with Bitcoin Depot expected to see substantial earnings growth, while Coinbase faces projected earnings declines. Ultimately, both companies present compelling, albeit different, investment theses. Coinbase offers stability through diversification and regulatory advantage, while Bitcoin Depot promises higher growth potential fueled by aggressive expansion and attractive valuation. Investors must weigh these factors against their own risk appetite and market outlook. It's a classic battle of strategy versus diversification. But what happens when a stablecoin goes truly native on the Bitcoin network? Get ready for some groundbreaking news about Tether and the RGB protocol. Tether goes native on Bitcoin with RGB protocol. In a monumental development poised to redefine the capabilities of the Bitcoin network, Tether, the issuer of the world's largest dollar-pegged stablecoin, USDT, has announced its intention to launch USD natively on Bitcoin utilizing the innovative RGB protocol. This strategic move marks a significant milestone, positioning USDT as the first major stablecoin to operate directly on the Bitcoin blockchain, promising enhanced privacy, scalability, and efficiency for users. The RGB protocol, which recently reached its mainnet with version 0.11.1, is specifically designed to enable the issuance and transfer of digital assets with a strong emphasis on privacy and scalability, all while operating under Bitcoin's advanced Taproot framework. This integration means that USDT holders will soon be able to manage their tokens alongside their Bitcoin holdings within the same wallet. Transactions will be settled directly on the Bitcoin blockchain, but with the unique advantage of being lightweight and confidential, addressing some of the long-standing scalability and privacy concerns often associated with blockchain-based transactions. This is a crucial step towards unlocking Bitcoin's potential as a more versatile payments network. Tether CEO Paulo Ardoino expressed enthusiasm for the integration, stating, "Bitcoin deserves a stablecoin that feels truly native, lightweight, private, and scalable." With USDT's circulating supply currently standing at approximately $167 billion, extending its presence to the RGB protocol on Bitcoin is expected to dramatically broaden the token's reach and utility. This expansion not only benefits USDT users by offering more seamless integration with the Bitcoin ecosystem, but also significantly enhances Bitcoin's potential as a robust platform for a wider array of financial applications and transactions beyond simple value transfer. The ability to transact stablecoins privately and efficiently on the Bitcoin layer could unlock new use cases and attract a broader user base. The technical underpinnings of RGB are key to understanding this development. RGB leverages client-side validation and smart contracts, allowing for complex asset management without cluttering the main blockchain. Transactions are validated by the recipient's client, ensuring that only necessary information is broadcasted. This architecture is particularly well-suited for privacy-focused applications and high-frequency transactions, making it an ideal fit for a stablecoin like USDT. By operating on Bitcoin's Taproot, RGB can take advantage of enhanced scripting capabilities and reduce transaction sizes, further contributing to the network's efficiency and scalability. This move by Tether is seen by many as a validation of Bitcoin's evolving capabilities and the potential of Layer 2 and sidechain solutions. It signals a growing trend of integrating advanced functionalities onto the Bitcoin network, moving beyond its traditional role as a store of value. The implications for the broader stablecoin market and the digital asset space are substantial, potentially setting a new standard for how stablecoins interact with major blockchain networks. As the crypto space continues to mature, innovations like the USDT integration via RGB are critical for driving adoption and expanding the utility of blockchain technology. This is truly a game changer for stablecoins and Bitcoin's future. But before we sign off, let's do a quick recap of all the massive news we covered today. All right, everyone, that's a wrap on another action-packed Bitcoin Bulletin. We saw a massive surge in institutional confidence with Bitcoin mining and Ethereum accumulation, critical price levels to watch for XRP, Bitcoin, and Ethereum, a stock showdown between Bitcoin Depot and Coinbase, and the groundbreaking news of Tether launching USDT natively on Bitcoin via RGB. Don't forget to like this video, subscribe to the channel for all your essential crypto updates, and hit that notification bell so you're always in the loop. Also, make sure to follow us on all our social media channels for more insights and discussions. We'll see you in the next one.